King World News. I'm Eric King, and you're about to hear from Jonathan Haycock, who was on Wall Street for 27 long years. He worked in London, he's seen it all, and now he is telling people to buy gold. Be sure to go to our homepage. We've already had Alistair McLeod, but without any further delay, here is Jonathan Haycock. Joining us now is Jonathan Haycock, who is now working with Egon von Greyerz over at von Greyerz. But Jonathan, your background is quite amazing. You were a barrister initially, and then, of course, you were on Wall Street 27 years. You were one of the longest-serving managing directors in history at Morgan Stanley in London. You have quite a background, and now you're one of the converted. You're over there with Egon, and, of course, you're a family member, but you've been converted, is what Egon said to me. And so I don't know if all the talks he had with you won you over, or you just knew this anyway, but you're very into gold. You're in a golden family, of course, and at least since 2002, since this was formed. And before we kick this off, you told me it had grown from, an acorn to something enormous, and you've watched this thing grow for a quarter century. But why did you join with Egon? I mean, you could have done anything. You could have retired and just walked away altogether. And by the way, for people listening, look at the picture of Jonathan. He looks like he's in GQ magazine. But go ahead, Jonathan. I'm going to hand it off to you there.
Well, that really is quite an introduction, Eric. I'm blushing here, I can tell you. I mean, to answer your question, why has it taken me 25 years to join von Greyerz? Well, look, it took Egon 25 years to realize that I might be up to it. I mean, that might be the question that you should be asking Egon. But look, it's a wonderful privilege, firstly, to talk to you for the first time, Eric. I greatly appreciate the opportunity. And we are talking at a point in history where these are golden times. Make no mistake, Eric, the timing of our call today is just impeccable. And maybe, you talk a little bit about my past on Wall Street before coming into von Greyerz. The reality is the timing was right a year ago to swap equities for gold, okay? Because it became clear, and as you say, as part of the family, Egon and I clearly have talked about markets for 27 years together and longer. And it became very obvious about a year ago that the time was right for a Wall Street guy like me to come into the world of gold and to work at von Greyerz and educate, or at least try to educate, the mainstream world as to the merits of gold, because it became clear a year or so ago that the time was right, that it couldn't be just gold converts to carry on enjoying the bull market to themselves. It was time for the rest of the world to wake up to the asset class and its merits. And the truth is, they are still not there, and we can get into it. But we just felt that the timing was right because we think this market is going to explode, and I make no bones about it. I think that all the symptoms are there, Eric, today. We could be on the precipice of a sea change in global finance. Let's just think about some of the headlines that have been dominating the news in the last few weeks, okay? A run on the Bank of England gold vaults. The Korean Mint suspending sales of gold bars due to excess demand. Chinese insurance companies piloting buying gold for the first time in 1% of their assets. That's $27 billion of incremental demand that's just been created. And that's before you start talking about the talk of the US gold reserves being revalued. So, I mean, it's incredible. The timing is amazing. And look, I'm a very lucky guy. I think my timing to join von Greyerz a year ago, I could never have imagined, Eric, that I would be joining the gold world at a point where all factors seem to be colliding to this asset class. Obviously it's been in a secular bull market since the early 2000s, but is at the point where the mainstream is going to have to sit up and pay attention.
Yeah, I was talking with Egon last time we did an interview, but it's interesting when you look back, and I don't know if you're old enough to have been there, but I remember the 1970s bull market in gold. Egon does as well. And the old saying is it helps, gold does. It helps keep what's $1 today, $1 tomorrow, and whatever currency you happen to be working in. You could be working in pounds, yen, whatever. It doesn't matter, but it preserves this purchasing power. I've never really completely agreed with that because I understand the theory in that. But when you go back to the 1970s, I mean, you had the stock market chopping around from 66 to 82, basically going nowhere. It had a range of primarily 750 to 950, somewhere in there, 700 to 900, with some, times where it would go to 1,000 and then maybe down towards the 500 level. But this thing basically chops around and does nothing. Now, during that time period from 70 to 80, you have this massive monetary debasement, right, that really begins in earnest in 1971 when the U.S. goes off the gold standard. And those that moved money into gold and out of stocks enjoyed massive gains. So the stock market's chopping around. It's not getting anywhere. So the inflation is destroying you. And if you're in bonds, you're completely incinerated. But yet if you were in gold, gold marches higher by 25.5-fold and silver goes up 38-fold. Now that's a massive, massive wealth transfer. Staggering, completely shocking when you sit down and look at that. Is that the opportunity that we're looking at this time around where we're going to see this massive wealth transfer?
Look, I think we are. I mean, you bring up what I think is the relevant period for us to start thinking about now, and that is the 70s and that stagflation. We've had two CPI prints that have come in with inflation higher than expected, and we've got very, very, very low growth. Right, so you've got low growth, embedded inflation because of all the printing of money. And look, we know what happened in the 70s. Gold went from 35 to 850, right, in 1980. And, what few people realize is that this century already, gold has outperformed the S&P, with the S&P in a bull market, right? But few people realize, because they haven't had to realize, Eric, that gold has actually outperformed the S&P this century, including with dividends reinvested, right? But people haven't had to even think about that because the printing of money has just caused this ballooning in asset classes. But at some point, there is going to be a great reckoning. And with all these symptoms that we're talking about now, it feels like it really is creaking, and the mainstream world doesn't have any protection. We know that the wealth creation has been enormous, historic. I read a piece of research the other day showing that at today's prices, there's going to be about $100 trillion of wealth that's going to be transferred from the baby boomer generation to the next generation in the next 25 years, and in the next 5 years, $18 trillion. But that's got to be protected, okay? And what you know and what I know is that the mainstream world that I inhabited for 27 years doesn't own that protection, and that protection is gold. And it's incredible, Eric, that people have very short memories. I mean, I sat on the trading floor at Morgan Stanley in 2008, and I sat there picking up the phone to my loyal clients, and they were saying, Johnny, there's only one thing that I want you to do for me today, and that is get my money the hell out of Morgan Stanley because you're going bust, which we were, and I want you to put it immediately into Credit Suisse. Into Credit Suisse. I mean, you couldn't make it up. You couldn't make it up. And so as we have this conversation now, of course, people have almost forgotten that 2 years ago, Credit Suisse went bust. Silicon Valley Bank. How many people mention Silicon Valley Bank anymore? They just don't. Because, they're just focused on the S&P and the Magnificent Seven, these tech stocks that keep on performing well, okay? But all the signs are there. All the signs are there. We know from the TMT bubble in 2000 that all these bubbles eventually come to an end. And I can give you some valuation stats in a moment, which I'm sure you're fully aware of. But look, I'm a Brit, okay? And I, saw the disastrous Liz Truss government back in 2022. The government, we've had a terrible time, as you know, in politics here. We still do, with lots of different leaders. But Liz Truss lasted 7 weeks. And one of the reasons she only lasted 7 weeks, of course, was because of a budget where she put through some unfunded tax cuts. And what happened? The gilt market sold off overnight, okay, dramatically. And overnight, and this was only back in the autumn of 2022, the pension fund industry in the UK was insolvent. But people have already forgotten that. The only reason why the pension fund industry survived in 2022 was because the Bank of England had to step in, intervene, and buy gilts to save the bond market, right? Otherwise, all the pension funds would have been bust. And this is just happening more and more and more. And so with all these signs that we're seeing now about, demand for physical delivery of gold, as you know, with Egon, he saw this 25 years ago, and we'll come on to, why you have to own gold physically outside the banking system in your own name. You've got to own it the right way. That is just as important as having exposure to the asset class at all. Okay, you've got to own it the right way. But long story short, Eric, what are we seeing? We are seeing trust in fiat currency coming now to a shuddering halt. That is what we're seeing.
When you talk about paper money, fiat money, it's backed by nothing. So it doesn't matter if we're talking about the US dollar, the yen, the pound. It's a fantasy. It's fiat money backed by nothing. And this is a new age we live in, because they used to back things with hard assets, as you know, and even in the United States, we had silver money circulating, and further back, we had gold money circulating as well. And so Alan Greenspan talked about this in his paper in 1966, the fact that there really was no inflation during that entire time. And of course, you go off the gold standard and everything goes to hell in a handbasket, and the people suffer. So we've seen this global inflation, and it's a very difficult time. I'm over here in Japan, and I can tell you this. Their yen had been collapsing up until recently, got all the way to 158. It's pushed them to the brink. I think the people have dealt with this inflation and low wages for so long, but you get pushed. And I think they've been pushed about as far as you can push them. And so I think that meeting, in part where I saw the Prime Minister of Japan meet with Donald Trump, some of that I think had to do with their currency. I noticed since then the dollar has weakened and the yen has gained some strength. So we're back to around 150. But, when you talk about the destruction of fiat money, it's so destructive because so few people understand it and so few people know how to protect themselves.
Yeah, and to my point, they haven't as yet, despite the fact of the GFC in 2008, another banking crisis, of course, that we had 2 years ago. But it's too big to fail, and what happens is just more money gets printed, and people get banks get saved, institutions get saved. But at the end of the day, the purchasing power of fiat currency just continues to diminish. And it is that point that the mainstream world doesn't understand, that it's not actually about the gold price going up. It's about their pounds. It's about their dollars. It's about their Swiss francs. It's about the yen, all going down. As you know, the dollar has declined by 98% since 1971. And when you've got $37 trillion worth of debt, there's only one way out, and that's to inflate it away and print more money. We know that governments will always save the bond market before saving their currency, okay? And so, again, one of the reasons why it became so clear that now was the time to join von GREYERZ was because there's no way out. The only way out is to inflate the way out. This inflation is embedded, and they're going to have to print more money. I mean, here's the thing. We've got a debt crisis globally, okay? Fact. There are only 5 ways to solve a debt crisis: austerity, default, growth, hyperinflation, or financial repression, okay? Well, I can tell you that the electorate don't want any more austerity. Default, politically unacceptable. Growth, well, that would be great, right? But good luck with that. We've had the internet, since the late 90s, 2000, and that hasn't increased productivity. Hyperinflation, yeah, possibly. quite possibly, and financial repression, i.e., where governments will just force institutions and pension funds to buy their own domestic bonds to keep yields down. But how are they going to do that? How are they going to finance buying their bonds? They'll have to sell equities. That's what they'll have to do. And so they're just stuck, Eric. But what we do know is that there's going to be more printing of money, and that's why central banks literally are gold's best friend. And this secular bull market, to me, is only going one way, and that's a lot higher, and people don't own it. But for me, I think, look, let's keep this really straightforward. When we think about all the headlines coming across our screens every day at the moment, I'm not going to be able to tell you exactly, what Trump or Scott Bessent are going to do with revaluing the gold reserves in the U.S. We can just speculate why. Marking to market would add $850 million to the TGA. Well, that's great at today's prices, but when you've got $37 trillion of debt, it doesn't really touch the sides. But to me, Eric, the specifics are irrelevant. What's relevant is that for the first time in 50 years, gold is being discussed by the U.S. government. That's critical.
Just to do with what you were talking about with sentiment, because you were on the street for so long, this is going to blow your mind. But as you know, we've had this rise in gold. You've watched it go from $1,800 on this leg up towards the $3,000 level with very few hiccups. And it's consolidating up here. Who knows what it'll trade on a day-to-day or week-to-week, month-to-month basis. The trend is obviously higher no matter what it does or how much volatility you see. But I'm going to ask you a question. The GDXJ is one of those funds that tracks, producing miners, et cetera. You've got the HUI, you've got the XAU, but one of these smaller ones is a GDXJ, right, that has all these various components in it. In the last 6 months, how many days of inflows, cash inflows, do you think that it's seen? Take a guess for me. Remember, gold is marched. Gold is marched from 1,800 to 3,000, basically. Take a guess.
In the last 6 months, I'm going to go 10 days, something like that.
Close. 1 day.
But listen, it doesn't surprise me. I'm going to give you a couple of stats.
And I know you're going to go from here, but I just wanted to bring that up to your point on sentiment. Sentiment is dark, sentiment is ugly, and nobody believes. Continue.
And this is why you're going to see an enormous revaluing of the asset class. I mean, think of that. The fact is there is a major structural underweight that's been built up over decades just at the point where gold is becoming increasingly relevant. Okay? Now, here's some stats for you. If you go back, and I've got stats going back to 1921, but I'll keep this brief. In 1932, gold and gold miners as a percentage of total global assets accounted for 20%. Okay? So 20% of total global assets in 1932 was gold and gold miners. Okay? In 1948, that number was 30%. In 1981, that number was 26%. At the end of 2024, that number is 1%. 1%. It's just breathtaking. Absolutely breathtaking. And of course, most people just look at the gold price and say, hey, look, it's gone from $250 to almost $3,000 today, $2,900 today. I must have missed it. But of course, as you know, Eric, it's the wrong way of looking at it. You've got to look at gold adjusted for money supply. And here's the thing. Gold prices today, at today's prices, when you adjust for U.S. money supply, are 75% below the 1980 peak. Let me repeat that. At today's gold prices at 2,900, gold prices are 75% below the 1980 peak when you adjust for money supply. It's just extraordinary. But those are the facts. So, if you think about it, 1971 was a key year because of abandoning the gold standard. 2022 was absolutely critical year with the weaponizing of the dollar and all the BRICS and central banks in the East realizing that they had to sell treasuries to buy gold because they realized that, their dollar assets could be stolen at any point by the US. So you've got this persistent demand from central banks, which has been pushing up the gold price at a point where the mainstream are not even on the pitch. So just think about what can happen to the price once the mainstream investor, pension funds, institutions, family offices start allocating to the asset class. There simply isn't the supply to cope with that incremental demand. It's really exciting. And here's one more thing on supply and demand, Eric. It is a fact that since 2005, the amount of gold discovered has declined by 50% every 5 years. We're simply running out of new gold. We're running out of new gold. So the supply-demand mismatch that we are seeing now, and that's before the mainstream world gets on the pitch, is extreme. So I think you can see the gold price revalue and revalue and revalue. And that's why I joined the business when I did.
And for people listening around the world, Jonathan Haycock, again, has joined with Von GREYERZ. He's a family member of Egon's. This has become a very big, very powerful firm. I think you guys are followed by the who's who and the family offices, and more customers from family offices are getting involved in gold, as you know, Johnny. But, 27 years on Wall Street, one of the longest serving managing directors at Morgan Stanley London, and you just bailed out on the business and said, I'm coming into this because I know it's the future. For people who want to learn more about Von GREYERZ or who are going to want to follow Jonathan Haycock's writings, just go in, click on the interview page. There's going to be a link there. It'll take you right into Von GREYERZ, so you can go in and look at fascinating articles and interviews there. Jonathan Haycock, now a member of Von GREYERZ. Thank you for joining us on King World News.
It's my pleasure, Eric. Thank you for having me on the show.
Be sure to tune in as we will continue to release interviews with the top people in the world throughout the week. Also, make sure to check out the King World News blog.